Debt management, next on Caucus, New Jersey.
Funding for this edition of Caucus, New Jersey has been provided by New Jersey Manufacturers Insurance Group, auto insurance, homeowners insurance, and banking under the principle of stewardship. PSE&G, committed to improving New Jersey's economy and strengthening its communities. Verizon Communications, MD Advantage Insurance Company of New Jersey, the law firm of Gibbons PC, and by Cohn Resnick, providing accounting, tax, and advisory services for more than 90 years. Promotional support provided by the Star Ledger, powering NJ.com, and by NJ Biz, all business, all New Jersey.
Welcome to Caucus, New Jersey. I'm Steve Adubato. You know, the average U.S. household has credit card debt of around $15,000. Now, many people find themselves in a financial trap and really don't know how to get out of it. Here in the studio to discuss the debt cycle and ways to avoid it, we have Lou Vetere, Chairman of the Board of Directors, New Jersey Credit Union League. Tiffany Alice is the author of The 1 Week Budget. Wanda Hardy, Chief Executive Officer, the Financial Wellness Institute. And finally, Barbara O'Neill, Financial Management Specialist, Rutgers Cooperative Extension. I want to thank all of you for joining us, talking about debt management. You know, how does it happen? How do we get into this debt cycle and how to get out of it? Lou, let me ask you, common problem for many in this country?
Oh, I think it's a big problem for many people in the United States. You know, we have a tendency to overspend our income. Rolling up credit card debt significantly. The cost to live in society far exceeds a lot of people's income at this point.
And so, for those of us who have children and want to teach them the right way, teach them the value of a dollar, we also find the fact that our kids are consumed and bombarded with messages about what they think they have to have. Now, you have a fascinating situation, do you not?
Yes, I do.
And you come to write this book, The 1 Week Budget, Learn to Create Your Money Management System in 7 days or less, from your own experience.
Yes.
Everyone comes to this, right, their own experience.
Yes.
Your experience and your writing and your expertise about this comes from?
My household.
Yeah.
So I was fortunate enough, my father was a CFO, and I have 4 sisters, so he taught my sisters and I very early on about money. I think he was worried. I have all girls, and I want to make sure that they're set. So
what was the message he taught you?
He taught us everything from managing your money. Remember when they used to have the passbooks?
Oh.
So we didn't
don't worry, I'm too young to remember that.
So we didn't have Sweet 16s. Instead, when you were 14, he walked you to the bank and you opened up a bank account with him, a joint account.
Right.
And I can remember every week I used to work, and I got my working papers at 14. And every week you'd have to bring him your passbook and have a one-on-one meeting and explain your deposits, your withdrawals, and why and what you spend your money on.
Okay, but so everyone who gets into the debt cycle winds up getting there a certain way. Did you get into a debt cycle?
Yes, I did.
Okay, is it a fact that you wound up owing a few bucks?
More than a few.
How many?
About $30,000 in credit card debt.
30,000.
Yes.
How?
A credit card scam, a friend of mine who I thought was a friend. And I didn't know at the time, and I wanted to learn to invest, and he said, well, the best way to invest is to use other people's money, and that you could take money off of a credit card. And so I did. I didn't even know that was possible. Up until then, my father had taught me to pay my credit card.
Hold on, when you were a little kid, you didn't say, Tiffany, let me talk to you about credit card scams.
Well, no, but he did tell me you should pay off your credit card bill every month in full, which I did.
Right.
And then I did that, and of course he was gone. And I didn't know what to do, and so I had to learn very quickly how to pay off that debt. Yeah.
And getting out of that debt and the lessons you learned caused you to want to teach others.
Exactly.
Okay.
One of the worst things you can do is take a cash advance on a credit card.
Say that again?
One of the worst things that you can do is take a cash advance on a credit card because the interest rate is always higher than if you use the credit card.
Okay, Wanda, this is interesting. You just opened up the door to where I want to go. The most common mistakes we make that often causes us to get into this debt cycle that is a problem. Number 1, say it again.
Taking a cash advance off of a credit card.
Yeah, absolutely. You can't borrow your way out of debt.
You can't borrow your way.
I mean, that's plain and simple.
Okay, number 1, Can't take a cash advance on a credit card. Number 2, say that again.
You can't borrow your way out of debt.
Why not?
Because you're just digging a bigger hole. And you're just digging and digging. And, you know, if you're taking out a loan to pay off another debt, it's just compounding the problem. And we see that a lot where people take out debt consolidation loans, Steve, because
I see that all the time.
What they'll do is they'll take out this one loan, wipe out all the credit card balances, get them down to 0. And if they don't have the willpower, which many people don't, those balances start racking back up again. And then they're in the deeper hole because they've got the consolidation loan payment plus the new balances on the credit cards.
And Barbara, I think that's an important point is if you can't pay off your credit card bill every month, you're going to find yourself in that difficulty. Because so you need to be able to control your spending and make sure that you pay off that credit card debt every month. The interest rates on credit cards are astronomical. And then if you miss a payment by a date, the interest rates go up a lot higher.
Lou, how do they get you?
You know what, I think it's a combination of many things, Steve. You know, there's a lot of marketing out there. You touched on it with the kids. You know, the kids see things they want. Parents want their kids to have everything that they want, and that's not a bad thing. But, you know, there's a fiscal responsibility that has to lay into that also.
I think they really start in college. Can you remember on college campuses when they had who didn't want the free candy bar or Visor or freebie or whatever?
You mean that one with the credit card?
Yes. I didn't know, but at 23, when I checked my credit score for the first time, I had 20 credit cards that I didn't have physically.
What?
Because I'd signed up for everything. I didn't know that they would go home.
You got all those candy bars and you had a credit card? You had no idea what that would mean.
No, I didn't know, honestly. And so the card would go home, and I didn't know my father would cut them up and throw them away. And so I just thought I was getting free stuff.
That's great.
We've become a society of buy now and pay later.
Yes.
And,
Well,
and
let's talk about that.
That's credit
Say it
card
again.
debt.
Buy now.
Buy now and pay later. From the Home Depot to the Lowe's, buy it and pay it off in 12 months. Well, at the end of the day, if you're not focused to pay that off on a monthly basis, when you hit the 12th month, you're going to end up paying interest from the day one of the loan. It's going to be added back in again.
So Juana raises a great point, because one of the underlying themes that's being talked about here, and some of the numbers we're about to put up in this graphic will bear it out, is that clearly one of the patterns here, you don't need me to tell you this, I'm not a financial expert, is that we are clearly, as a society, spending much more than we are taking in, and we are clearly not saving enough. Fair to say?
Fair enough.
So let's try a couple numbers. Natalie, Sandy, our producer, our team in the control room, let's put up the graphic, okay? First graphic, take a look up there. All right. Now, I was just talking to Natalie before we get in here. Natalie, what are you, like 40, Natalie? No, I'm joking. Natalie's 24. Natalie, 40 is not that old, trust me. She's 24, and I said, do you have a retirement plan? She said, yes. I said, you do? 58% do not have a retirement plan. Forget about 24. 3 times that age, they don't have a retirement plan. Is that shocking to anyone here?
No, because I see the research all the time.
I was shocked by that. Nearly 40% don't know what an annuity or a mutual fund is. Okay? By the way, what is an annuity?
Contract with a life insurance company.
A contract with a life insurance fund company, and a mutual fund is a collection of individual stocks, equities that are, but not an individual stock itself.
So it's a managed portfolio.
Or bonds, depending on what the fund is all about.
Bonds.
And how about this last one, putting Social Security in perspective? 20% of all Americans rely purely on Social Security for their retirement needs. What's the problem with that?
I actually am surprised at that number. I thought it would be closer to the 58%. And that's why they don't have a retirement plan, because they're expecting Social Security to be the plan that they have
What's wrong
in
with
retirement. It's not enough money for most people. Now, for some people, they can live on Social Security, but most people can't. Most people, when they retire, still have a mortgage that they have to pay because they haven't paid off their house, have car loans, maybe have some credit card debt. Hopefully they don't. And there's not enough money in Social Security to pay for that.
I've had some of my clients tell me, oh, I'm not worried, I have a pension. And I said, you know, Detroit just filed for bankruptcy. They're bankrupt, and people who have pensions will not be getting that money. So you never know.
But hold on. But if you say that to people, we're not looking to scare anybody here. You got your Social Security, and hopefully it's safe. Hopefully our leaders in Washington are going to do what they need to do to have Social Security remain solvent for a long time.
But you know, my students at Rutgers don't believe it'll be there for them.
Okay, but let's piece at a time here.
Yeah.
That's one piece. Now the pension piece. All you can do on the pension piece is pay in, hope that your employer pays some, whatever, and match, and then hope it's going to be there. It's beyond your control who does what and what happens with that pension fund. Fair to say?
True.
But beyond that, it also seems that what's being said is you have to do some things independently on your own.
Absolutely.
That's a lot to ask of someone, is it not, in terms of debt management, retirement planning? Is that a lot to ask?
It is, but I think the best way to get people to do something in that regard, Steve, even if it's only 1% of their pay, is to set it up automatically.
Yes.
And fortunately, we have a lot of venues for that. People in the corporate world can do a 401k, nonprofit people can do a 403b, people who work for federal government and service members can do the thrift savings plan.
How about someone who just started their own business?
Well, they have venues too. They can do a SEP IRA. A SEP IRA would be a SEP, Simplified Employee Pension.
IRA, individual retirement account?
It's like an IRA for people who are self-employed. And they can, if they're a sole proprietor kind of person, they can do 20% of their net income, put that into their SEP.
And then something else that you mentioned there when you said that the employee, if they don't join a 401k, 403b, or whatever the pension plan is, they're technically leaving money on the table. Because if the employer's going to match you 3% of your income, and you can't find 3%, you're leaving money on the table, so to speak. The other thing about joining one of these plans is the fact that you're not taxed on the money. They're pre-tax dollars that's being put away from you. So so in the end of the day, you can potentially have more take-home pay because you're not paying all the taxes on the dollars today.
But you know, Wanda, you know what's interesting here? Everything that was just said in the last 5 minutes is very insightful and relevant. But the last piece of information, which caused me to want to go back to Lou, the last statistic that we didn't put up there, Natalie, help me again. More than half of the Americans were polled. By the way, what was the source again on that? The Deloitte Center of Financial Services recently did a poll. And then what was it again? More than half of all those polls said they don't trust anyone else's advice on money. Now, why am I saying that? I know that you and your organization are now trying to get into the high schools and do some financial literacy, which is to help students trust somebody else's advice on these matters. Why?
Well, we think financial literacy is a big gap.
What is it, by the way?
In society. Knowing how to manage money. It really comes down to knowing how to manage money. Understanding how expensive things could be, understanding how your career choice early on in life could really drive your financial situation later on in life. So we've partnered with the New Jersey Coalition for Financial Education.
What's a reality fair, by the way?
Reality fair is where we go into high schools, we bring credit union volunteers, and we spend one day in a high school, and we try to teach maybe 500 to 1,000 kids at a time. And we set up a program where they are graduating high school, they're choosing either to go into a trade or they're go on to college. They see how much money they can make as a result of that. They see what it costs to go to college and what education gets them as far as a career goes. And once we do that, then we have them go around to different stations where they have to buy things. They have to buy a car, they have to buy a house or decide to rent a house. We entice them to buy things that they don't really need. And at the end of the day, we say, okay, here's what happened. We have counselors at the end of it that say, okay, you're making X, you're spending Y, you can't live on this. And then we teach them how to manage their way backwards through that. The high school kids love it. They absolutely love this program.
Is there some shock that goes on as to, hey, wait a minute, I thought I had...
You know, I thought I could afford that Ferrari. What do you mean I can't afford that?
I was a teacher here in Jersey for about 10 years. And, you know with kids, they don't want to hear you talk. So I have a game similar. It's called Real Life, A Game of Choices. And
Real Life, A Game of Choices.
And I play it throughout New Jersey, New York, and wherever else someone asks me to bring it.
What's your marketing name out there?
The Budgetnista.
The Budgetnista.
Yes, purposefully done because I wanted it to be fun because money is scary enough.
Go ahead.
And so I go to these high schools, and it's similar in that the students pick a professional profile of how much they make, if they have kids, and they have to make financial choices around the room. And then it also teaches entrepreneurship, because at the tables are entrepreneurs who also have to make financial choices. So you get to hear conversations that you wouldn't normally hear, like, we don't have enough, you know, our kid has asthma, we need to get medicine, versus maybe living in this particular neighborhood.
Okay, you know, there's also, I'll have you jump back in. When younger people, and others watch government officials, particularly in Washington, kick the proverbial can down the road. Listen, when people hear about the debt ceiling, I'm sure there's at a cocktail party saying, let me get out of this conversation. I know it's not particularly fascinating, but the debt ceiling is a euphemism for, hey, how much money are we going to borrow from foreign countries before it's not our country anymore? That's the way I look at it. That gets my interest, right?
Sure.
We're talking about managing our own personal family debt and trying to avoid the debt cycle in our own lives when our country is in a horrific debt cycle, and we watch our government leaders not face it and deal with it, and we're trying to say we need to face it. Is there a correlation?
I think the only thing that you can say to people in that situation is do what you can, control what you can. There's so many things
and don't do what they do?
Don't do what they do. Take responsibility. What you think about, you bring about.
What you think, say that again?
What you think about, you bring about. If you set some small goals. We developed a whole program at Rutgers called Small Steps to Health and Wealth, and we have a book based on that. And what we encourage people to do is just do something small and then build on it. So save 1% of your pay this year, save 2% next year. We have a whole strategy called Kick It Up a Notch, where you're just doing something good, but then you ratchet it up to the next step and you do more of it the following year. So I think people just need to control what they can, realize that there are some things that are out of our control, build up savings, reduce debt, just those time-tested things.
What you can control. Want to jump in?
Exactly.
As Dr. O'Neill is saying, when she said start small, the principle for money management is basic. It's 10-10-80. 10-10-80. If you stick with 10-10-80, you're in control of your money.
Break it down.
First 10% savings. Whenever money comes in, the first 10% of your income, your net income, is savings. You must always save.
Lou's
you may not be able to get
yes.
to the
Go
10% first, and you might have to start small with 1%, but 10% for savings. That's the goal. Always the goal.
No matter what you make?
No matter what your emergency.
Someone says, I don't make enough to save 10%.
Start small. Start with 1%.
Okay,
Start with $50. But the goal is 10%. The second 10% is you've got to share. You've got to pay it forward. You have to pay it forward, because in life, what you put out comes back to you. If you're not putting anything out, nothing's coming back to you.
So where's this 10% going?
10% you can donate it to charity. Help someone. There's always someone in need, but I'm giving you the principles of money management.
Hold on, back up. Wanda, you're saying first 10% saving. College fund, retirement fund, rainy day, lose my job, something happens. Hard enough. Next 10%, I want to make sure everybody else is okay. Give it to my church, give it to the local YMCA, give it to some organization, community, nonprofit. What? I'm just saying what some people might say.
Some people
you get any of that back?
Absolutely,
and
absolutely. And I always challenge them, just try it for a month and see what happens. Just try it for a month, change your behavior, and help someone. It comes back to you tenfold in ways you could have. Because it'll come back to you, not necessarily in money, but in kindness. It might be a referral. It might be the next job. You never know where it's going to come from.
Where's the other 80?
The 80% is what you live off of. And notice the order that I gave it to you, 10-10-80. I didn't say 80-10-10. Because if you pay your bills first, the first thing you're going to say is you don't have any money to save. The second thing you're going to say is you don't have any money to help anyone. So it's a flip. It's the changing of the behavior.
You going with this, Lou?
Yeah, well, didn't you just show on the screen 58% of people don't have a retirement plan? There it is. Pay yourself first so that you have some money put aside.
So you agree with that as well?
Oh, I absolutely agree with that.
And do it automatically.
Do it automatically.
Whoa. automatically, like what are you, some sort of machine, a robot, do it
No, you
automatically?
sign a form, Steve. You just sign up for your 401k, you sign up for your 403b.
A great place to do that is at a credit union.
Even a lot of charities.
Look at you.
Even a lot of charities, going back to what Wanda just said, will take automatic
But how do,
donations.
I'm sorry for interrupting. How do you, seriously, how can you do it automatically?
Online banking, it's the easiest thing.
So
the best thing to
online, you can do, you guys do it automatically?
Absolutely.
Just
So
goes
you
right
can
in?
either direct deposit your entire paycheck, you can direct deposit a piece of your paycheck every month. You can put it into multiple accounts. At credit unions, you can have a checking account and then set up a savings account. So 10% of your pay goes into the savings account.
You don't
touch
stop it. It goes in.
It's automatic.
Automatic.
You can even do transfers
You like that?
automatically.
Sure.
Yeah.
You like that?
I
You like
automate
it?
my whole financial life. Your bills are paid automatically. Savings is automatic. Charity is automatic.
Charities automatic?
Charity can be
absolutely.
automatic.
But there's
Everything.
one thing, I actually like to write the check to myself. I actually write the check from Wanda Hardy to Wanda Hardy. That way I know I paid myself first. So that is a habit. I do it constantly. I write the check from Wanda Hardy to Wanda Hardy. I know that I paid myself first.
Quickie on this. I know there are a lot of single households with individuals who are running their own households. I'm curious about this. A lot of friends of ours, there are men and women in the households, the husbands, wives, others, or even same-sex situations, where there are very different views from one partner to the next about money. First of all, you see that a lot. And second of all, why the heck is it so hard for so many families, particularly couples, to talk honestly about money?
I think it's embarrassing for a lot of people. So they're afraid to talk about their own financial situation, even with their spouse or partner. You hate to admit that maybe you're not making as much money as you'd like to make. And it's a difficult conversation.
You're saying it's embarrassing for, if you have a lot, people, well,
if you have a lot, you don't want people to know you have a lot.
if you don't have enough,
you don't want people to know you
And people
have
act
enough.
like you should know already. There's a shame attached to not knowing how to manage your money.
Yeah.
if you don't have enough, there's shame attached to not having enough. If
And
you
even
have,
if you have enough, there's a shame when you mismanage your money.
what?
Yes, I have clients in the high six figures, and the mistakes that they've made, it's unbelievable. Unbelievable.
Just because you have money does not mean you know what to do with it.
Correct.
Just because you're a doctor doesn't mean you're a financial expert.
Oh, wow.
And it's also beyond the money, too.
It
It's
is.
the values that
value
underlie
system.
What do you
people's
mean?
decisions.
Money and values?
Yeah, well, the values, what you consider important.
Yeah.
That plays into, that's driving what people will do with their money and their time, too, for that matter.
I've seen close friends of ours not want to discuss money openly to the point where one spouse, and I won't say whether it's the man or the woman, will go along with a very large expenditure that the other spouse really didn't want to go along with, and it has strapped them in such a way where it has caused tremendous strife and tension in that relationship, which no longer has to do with money. It has to do with the quality of life.
And power.
And power and a lot of other things. We need to talk about money more openly, don't we?
We do.
I can tell you that my wife and I speak about money all the time.
Agree all the time?
No, absolutely not. Well, no, if she's watching this, yes, we always agree. And usually if we don't agree, I'm wrong. But, just so we know that.
You have to make it a regular conversation.
But we have a conversation all the time, and we started talking about money very early on in front of our children. Because we thought it was very important for them to understand that money doesn't grow on trees. You actually do have to earn it, save it, spend it wisely to be well off when you're retiring.
Money comes out of the ATM, and I joke with my kids sometimes when money comes out of the ATM, and they do actually think it comes out of a machine.
Yes.
And then all of a sudden I realized how ridiculous it was, and I started describing what I had to do, and they were so bored by the conversation about, you didn't realize how many shows that has to do? Yeah, okay, could you go back into the machine and get some more?
I knew a little girl who kept saying, go to the wall, and I couldn't understand what she meant. When her mom would say there was no money for something, well, get it from the wall. And then one day we went to the ATM, she said, the wall, and I thought.
That's not good. That's not good.
Yes.
Yeah, we got to put in 1 minute left. 1 minute left. We have a lot of work to do here, but this concept of financial literacy, we have the opportunity with this next generation, if you want to describe it this way, across the board to make some real progress here, do we not? To give them a better sense of a dollar, what it means, and also that it's just not going to be there because of Social Security, whether it's even there or not. We do have to do this.
We do have to do this, and I should share with you, I teach consumer economics at Rutgers and personal finance. And for the first time, I heard the term ninja.
Ninja.
And I stopped for a moment because I know what ninja used to be when I won't date myself at that age, but
2 seconds left. Go
I
ahead.
said, what is a ninja? And they said, no income, job, or assets. That's what the next generation, that's what they're calling themselves, ninjas. And from that point on, I said to myself, I have to do a better job to help them change their behavior.
Well, I wanted to end on a more positive note, but no, I'm kidding. Listen, you were all terrific. I want to thank you so much, and you've done a very important public service, and everyone has benefited from it. Thank you so much.
Thank you
Thank
for
you for
having
having
us.
us.
The preceding program has been a production of the Caucus Educational Corporation, celebrating 25 years of broadcast excellence. N13 for WNET, NJTV, and WHYY. Funding for this edition of Caucus New Jersey has been provided by New Jersey Manufacturers Insurance Group, PSC&G, Verizon Communications, MD Advantage Insurance Company of New Jersey, the law firm of Gibbons PC, and by Cohn Resnick. Transportation provided by Airbrook Limousine, serving the metropolitan New York, New Jersey area. Caucus New Jersey has been produced in partnership with TriStar Studios. This program has been made possible in part by Celgene.
We can see it. This day has never been closer. Today, thanks to the Leukemia and Lymphoma Society, hundreds of thousands with blood cancer are living a normal life. We're almost there. We're making cures happen. Join us.